All right, everybody, welcome back to another Kingscrowd podcast. This is the top weekly podcast for retail private market investing and capital raising. I'm your host, Brian from Kingscrowd. Today, I'm going to be joined by industry insider Scott Kitun and senior investment associate at Kingscrowd, Teddy Lyons. We are going to be taking the whole session today to be talking about some very interesting news that has been happening, that has been announced, and some of the potential implications for what it means for retail investors, for capital raising, and private market investing in general. So as probably many of you have seen, we have had a couple big announcements in the past few weeks. So this week, we had the announcement from Robinhood that they're going to be launching in the EU with tokenized equities. So essentially having 200 plus kind of tokenized offerings for different people in the EU. We had 2 weeks ago, Coinbase come out and say that they're seeking SEC approval for getting basically tokenization of equity. So we're seeing all of these pushes from a lot of these companies that are very big in the space moving to tokenization, but also some of the implications of that, of what it can mean for investors, of being able to get retail, non-accredited, everyday investors to potentially be able to invest in some of these later stage secondaries, private companies. Think of these as the household names, right? The SpaceX, the OpenAIs, Anthropics, Epic Games, etc. Scott, I want you to help kick things off today. You know, we've seen a lot of announcements kind of coming out from some of these big companies, but what does it all mean in your perspective? What are we seeing here? Is this just another way to wrap something in the new shiny thing of today, which is tokenization, or are we actually seeing real innovation happening?
Yeah, it's probably a bullshit wrapper. No, it's there's a lot going on. For one, let's start with the basics of investors and just our industry. One thing seems pretty clear to me, that we are looking at a future where Reg A is a very, very, very common as Reg D is now and has been for the past 15 years. If in fact tokenized, if in fact firms and platforms such as Coinbase and Robinhood wish to tokenize equities, there is almost no argument that can be made anymore that tokenization and crypto are securities, which is a major difference than say the last 3 or 4 years where we had this kind of like, is it a security? Is it not? How am I taxed? How am I not? What reporting obligations do I have? Do I not? So I think that's one thing, that we are now entering a place where it's like there are shit coins and there are securities. And that's a key difference, which I think is very important for our business at Kingscrowd, but also I think a very important thing for investors and protective devices. As far as tokenization, man, if I was a big token person, I would be like just going ape shit right now. I'd be so excited. So much is going on. And yet, and I mean that like genuinely, it's very exciting. And there's a lot of things and there's so many big brands, but also like I'm sitting back like, what does this mean again? What can I do now that I couldn't do like 5 minutes ago? Cause like I could trade it later thing. That's not going to mean anything, right? Cause like we don't have a secondary that's actually trading and up, and like Republic has INX and Robinhood is itself a marketplace, but we don't have anything that like truly you can like get your dollar's value back by trading at a secondary, right? So until then, it's just really cool. We're going to get into sort of some of the more specifics here with Republic's announcement of Mirror, but in general, I'm a big fan of where tokenization goes because of the simplicity, the technical simplicity for blockchain and just in general, all of it. Right. But overall, I don't know that anything really changed. Like, I guess we have the ability to just issue shares to someone via token. You know what I mean? Like it's just really exciting. It's like a culmination of something we've been listening to for 4 months now between BlackRock and Securitize and even Republic, who I love, but like, I still don't really feel different, if that makes sense.
Yeah. I think if you talk to the technologist side of the people running the blockchain, it's like, oh, it's, going to trade 24/7, instant settlement, doesn't require a middle person, right? There's kind of all these potential benefits of tokenization.
Assuming that there's another side. Like right now we have this one side of the marketplace, which the stock thing I do think is really smart in the sense that you create this 24/7 cycle, and presumably tokenized stocks should trade like regular stocks. But what if they don't? That's a huge what the fuck. And if they do, then I think it's really, really smart, because now it's like you're introducing that, and then you introduce some funds like we did with Hamilton Lane, and then you introduce some new late stage equity, and now it's like they should all start trading relatively close to what their NAV is. Then then this tokenization thing, I think, will go like absolutely ballistic. Like it will like forget everything you know and everything you do. Everyone's going to be tokenizing everything if that happens, but that's a huge, huge if.
Yeah. So the one other big announcement that I kind of purposefully left out of the intro, but relevant for those who are familiar with Kingscrowd and the podcast and the industry, is that Republic announced their mirror tokens, which is essentially a way, if I had to describe it, right? So there's these things called forward contracts. If I try and make this pretty simple, let's say I have a stock for a company that doesn't trade because it's private, and I want to be able to sell that to someone, but I'm not legally allowed to. Maybe it's restricted. The company doesn't allow me to resell it, anything like that. It's essentially a separate contract that I would make with another investor to say, if they IPO someday, I will give you the shares. In exchange, you give me the money now. So you're not actually getting the equity for that company at that point in time, but it's kind of a promise, right? So my understanding is how Republic is going about this with the mirror tokens is essentially that it's a type of a forward contract where they don't necessarily have to own the shares. Now, you would say they might want to own the shares because it's a hedge. If you buy 100 shares of SpaceX from them today, and that company 100x's by the time they IPO, they're not going to want to go to the open market and buy that for 100x the value, because they're going to lose all that money, right? So right. Curious, both of you, when you heard the announcement for the mirror tokens, what are you thinking? And Scott, where does this play into everything else that's happening with Robinhood and with Coinbase in general?
Yeah, so it's super novel. And full disclosure, I do not represent Republic. I am not speaking for Republic. I do not have any rooted interest in this other than I am an investor in Republic, but that is not, like the rest of these assets, not liquid, or at least yet. What I will venture to guess, if you look at the list of companies that are offered from, or like plan to be offered, as well as currently available on Republic's site for the Republic X or whatever they're calling it, they're eerily similar to, if you go to Republic Capital or our Capital site, you'll see all of the same companies that they've invested in, and it's pretty much all the same. Some of them maybe are new here, and I don't know. I haven't done a total deep dive, but a lot of them look pretty familiar. I would say for the ones that they already hold positions in, this is brilliant, right? To your point, a hedge. For the ones that they don't, I would imagine that they're currently in the business of securing secondaries in those companies, and that's basically their whole plan, is like treat it like a credit spread. We're going to invest on a secondary of Cursor at X, and we're selling our shares as a future contract at Y. We're going to hope to make the difference between X and Y, and along the way, we already collect on the Y. So from a business model perspective for Republic, it's brilliant. I think it's still a question, and this goes back to what I said 2 minutes ago on the token thing. I just think there's still questions there, and I am a huge proponent of it. I think we will inevitably get there, but I still question whether or not the regular investor, even like sophisticated investors, if they feel the same way about investing in this style or fashion as they do investing traditionally. Now, you'd argue they don't have access traditionally, so then that's not really a choice. It is still a choice to me. Like, I would rather put my money in something I'm fully assured of and understand than something I don't. That said, and then I'll hand over to Teddy, the part of this that I think the founder, whatever tech bro in me wants to see is, like, for real. Like, if you look at like Robinhood right now with its futures and its ability to bet on like the NBA finals and things like that, like those are basically the same thing, right? Like they're basically saying, hey, it's the battle of 1 or 0. Whatever number of people believe that the answer is going to be 1 are 60-40 percentage, and those who believe the answer is 0 or 40. The money has been committed. That money is ongoing. Once it closes up and the scenario plays out to either 1 or 0, we pay out. So like that is a kind of a very rudimentary gambler mentality way of betting futures on outcomes, predictive markets. This is the same thing. I'm basically saying, hey, I want to own on this pre-IPO on this assumption that it's going to be worth more than it's worth right now.
Mm-hmm.
If it's worth less than this, it's worth zero. If it's worth more, it's worth more. And like the Republic in this scenario, I'll like, not unlike Robinhood in the previous analogy, collect on the fees, and they collect on the taken cash out transaction. So like, I just think you're going to see a lot of these future contracts, and they're going to get a lot more secure. They're going to get a lot more sophisticated. And I do believe I'm already kind of seeing it with new seed and pre-seed investments, that the language especially as ChatGPT continues to write all of these legal documents, because that's what people are doing now, obviously, you're starting to see a lot of these kind of dead clauses where you have no transfer rights and you have all these things. And like at the time that seemed like completely smart as the founder, like, I don't want to deal with this bullshit. Now you're actually seeing them highlighted, unlike they used to just be in the boilerplate part that no one read. Now they're being highlighted and bargained over. Like, as an investor, I will give up a little bit of preference on this deal for the right to transfer or rename my ownership. And I think that's just a testament to people starting to recognize that, like, liquidity, like Bruce Lee said, be water. Liquidity takes a lot of different ways and appearances. I really think that. And so this whole thing, I think, sets up for, it's very future forward. But the tokenization component of this and the mirroring component of this, I do think there's still a big lag and learning curve. And like, until there's a second side of the marketplace that's like truly like equal or better to predictive to NAV, I think we're just going to be doing a lot of this talking and stuff. And like, it'll probably go quiet for a little while and then come back.
Well, let's even take like the whole technology side out of this with blockchain. But like, Teddy, what's your opinion in terms of these mirror tokens being able to open up potential access to some of these late stage companies? Is that something you're interested in? Do you think investors will be interested in? How are you taking a look at this?
Yeah, I mean, so for late stage tech investing, like there are plenty of late stage syndicates out there that allow accredited investors to invest in SpaceX or Anthropic, usually through kind of layered structures. So like that's an asset class that's very open to accredited investors. So obviously, being part of the crowdfunding world, opening that up to non-accredited investors, I am in support of that. I think, like Scott said, the whole tokenization piece of it, I think, has just continued to run into regulatory issues. And I think it was Robinhood. They submitted like a multiple 100-page document to the SEC, like laying out tokenization frameworks that just kind of like went silent. And the SEC kind of creating a framework around this, I think, it hasn't come yet. And I don't know, Scott, is that something that you think that they're going to be doing soon?
Yeah, I think that we are heading in, both my logic and just general like intuition. When there's companies that are worth trillions of dollars collectively that are all entering a singular space like this, and they're believing this is their like path of least resistance to retail, they're not going to let legislation get in the way of it. We're talking about $50 trillion or whatever. And that's not even talking about opening global borders. Like, it's in the hundreds of trillions. So yeah, I don't think that they're going to not lobby and win. The conversations I've had with SEC, which again, this is why I was start off this conversation about the securities component of this. It puts the onus on the issuer, which is like how it should have always been. Like right now we live in a world where the investor is the one who gets screwed, because either like we're protecting you so that you can't get access to better deals. And maybe that's true. You shouldn't, because you're not sophisticated. But the reality is, you answer a couple of questions, you make a certain amount of money, and voila, somehow I'm sophisticated enough to invest when actually I'm just as stupid as I was before. The reality is, doing it this way, requiring Reg A plus, you are saying as an issuer, if you're going to actually tokenize your asset, which I want to get into this next, because the your asset versus a wrapped SPV, that's where I have concerns. But I digress. We'll get to that. The tokenized asset direct, it does exactly what the SEC has been saying they want to do for about a year. Brian, you're on the committee. You could probably talk better this than I am. They want the onus to be on the issuer to say, look, like, this is what is out there. This is what could happen. This is the risk. Are you available to take the risk? Yes, I am. Great. Signature. You're out of there. You go invest whatever you want. I don't want to be responsible for 10 million investors. I want to be responsible for 1,000 issuers. That's much easier to control. And if we're going to be tokenizing, I think, and if everyone is accepting that that is at minimum is going to attempt to be the case, if I'm the SEC, I want the best people to self-regulate to the top and say, nope, we're securities. That's rubbish. That's shit. We're securities. We're treated differently. That's all crap. They want that. They want the ability to divide this, like right now, very blurry line of what is crypto and what is Bitcoin, what is a shit coin, they don't want that. Right. So I think this plays into the SEC's ability to undo a really bad knot that they kind of created themselves like 10 years ago. So I think we're getting there. Brian, do you have thoughts on that?
Yeah. And it's maybe good to just pause and talk about a little bit of what I think the SEC and like legislators are discussing today, right? So I believe it was the SEC has already come out in the past few weeks or months and basically said that meme coins are not securities, right? So if you're doing Teddy coin or Scott
That's
coin,
shit coin for the layman,
any other coins, it doesn't count as a security under the Howey test, right? Like it's not a pursuit of profits through the efforts of others, right? That's trying to be deriving value. It's speculation. That's what it is.
Yep.
So they said not a security. Now, the Genius Act has also recently passed, I believe, Congress and is going to the House, which that's a bill on stable coins. So that's things like if you think of Tether, USDC, these types of coins that are backed by assets. So again, kind of a completely different use case. What we're talking about in a lot of these discussions are security tokens, right? So it's a security, but it's something that's being tokenized, being put on the blockchain. There's potential benefits of that. There are a lot of technical good reasons for doing something like that. For some of these things like resale restrictions, transfer restrictions, lockups, all those things today are you got to like keep track of them, and it's probably really complex. That becomes pretty easy if it's on a blockchain and you know which classes of securities were issued when to which people. You can handle all of that technologically.
Yep.
I think where going back to the mirror tokens, where it's a little bit different is regardless of whether or not it's a token. And I think there's probably good reasons for why they're thinking of it as a token, but
tens of thousands of investors, like that already is reason enough.
Yeah. It introduces, in my mind, another aspect of risk, right? Because it's not just the risk of the underlying asset, like SpaceX. Okay, yeah. Is it going to go to 0 or 1, right? To use your analogy of we're making a bet, they're either going to IPO and be successful or this will be worth nothing. Well, yes, but in addition to that, there's an and Republic has to pay it out, right? So your contract now, your investment contract is with Republic. And that's potentially a risk that investors need to consider of if it takes SpaceX 10 years to IPO, is Republic still going to be around? Are they going to have the shares to be able to do that? Yeah. Is there something else that happens in the meantime? And I'm not saying this in a way to say it's not good to be able to give retail an option to have that seat at the table to be able to invest, but it is an added risk versus if you were just going out and buying secondary straight from SpaceX itself, right? In a tender offer or buying in a primary offering.
Yeah, I mean, and also Republic, I don't know. This is a guess, but like I don't think they have access to direct shares or like a primary tender from SpaceX. So they're most likely purchasing it from another GP who has access to shares, or even like a third layer SPV where they're buying shares, they're buying interest in an SPV that's buying interest in another SPV that's buying SpaceX shares. So it's not only like SpaceX might not pay you out, but it has to like feed through the layers as well.
This is the part I wanted to talk about. Like this is the and part of this, Teddy. One, again, there's a certain number of deals on that list of Republic I know are direct invest. They invested through Capital R.
Yep.
And like they're listed on there. There's not my like projection. Like you can go on there and they show it. There's a bunch that are through, I won't disclose, but mutual investors that I'm aware of that are passing through some of the shared preference and terms, probably at least for now, because it's the first time they're doing this and you want to make sure that it goes well and that there's nothing to be questioned about. So I think it probably right now for the deals being offered, they probably are either directly owned by them or they're shared with a mutual investor who has every reason to want both to win. Mm-hmm. In the future, this is where I have questions. And it's not about even Republic, because I actually think that like Ken and those guys have established themselves as the people trying to establish the transparent pathway from token and digital to legacy for retail. So like 100%. Short of something really shocking me. I would be absolutely shocked to find in the future that they did not do this in a way that is like how they believe the future should really actually look. That doesn't guarantee they're going to be in business when this thing's IPO. So like, that's a whole different thing. Also doesn't guarantee that they don't get bought for $10 billion by somebody else who's an asshole. Like, there's a lot of, risks that we're talking about. But I do think that we are talking about large, huge financially backed platforms that are probably far less risky than the real risk. The real risk is the black hat wearing token stud on Discord who is doing what Teddy mentioned, where they're taking a triple wrapped SPV where their shares in SPV of OpenAI don't even have a relationship with the person who has the relationship with the company, and vice versa. And that doesn't even go to the fact that the original deal probably was a 2 and 20 typical investment model, which then SPV'd at a 1 in 10, which then SPV'd probably at a greedy 1 in 10 again, or like no carry because they don't give a shit and they just took the fees. And you're going to be buying into that, and it is going to be very, very difficult, even for the most sophisticated, not just accredited, qualified purchaser, to decipher who owns what when. And it's one of these things that this is like the great P.T. Barnum move of all time. I saw this on Twitter. Don't make it true. But I thought it was hilarious. One of the tweets I saw was like, whoever, like basically Vlad from Robinhood must have gone to his stylist and said, I'm selling crypto today, so give me the most like snake oily fucking outfit you can get me. And he did. He's dressed in like an ascot and he's got the whole pinstripe suit like he's a circus guy. It's a joke because the history in crypto is not a joke. It's like really a lot of bad, nefarious behavior. Okay. So I'm saying this all because it's an important fact that like once we get to a world like this, where we say crypto and blockchain and token is transparency, it's record keeping, it's safety. That's a huge like sigh of relief for the investor. But the truth is that doesn't mean shit. Because if the underlying SPV that was purchased and repackaged here has been repackaged 2 other times before, and you can't even track down the seller, what if it's wrong? What if it's not even real? Like what? And I'm saying it's not going to be Republic, but you're just saying token, and then you're leaving it alone as if like, hey, it's all clear, it's token. You can see it on the blockchain, but you can't see all the paperwork that happened the last 3 years. Like you don't know where that thing sits on the cap table.
Just that's the repurchasing of SPVs of SPVs of SPV. It's like shouting mortgage-backed securities, like global financial crisis to me. We're just taking stuff, repackaging it, selling it to someone else, taking a cut of the fee, taking it, repackaging it, selling it to someone else.
I mean, I will say there are secondary purchases can get really sketchy. It's kind of like the Wild West. That's like all the brokers call it.
I'm not worried about it on the secondary side. It can't, we're already dealing with that. It can be, crappy, but like you can pick out a good GP. You create it like LFG Ventures, full disclosure, investor in Kingscrowd. Chris has been doing this for 14 years. He has been partnered up with some of the biggest, best companies and GPs in San Francisco and pulling out deals that fucking nobody will. He won't even tell me how he does it. It doesn't make any sense, but he's got access. He's trusted. He's got a whole history. But then if I sell that to you, and then you're like, hey, Scott, you're kind of a hustler. You want to go halvesies with me? I'm like, yeah, I'll go halvesies with you. So we both put $50K in. And then somewhere along the line, I'm like, actually, I don't give a shit about this anymore. I'm going to sell it. It's up. I'm going to sell my 50 for 100. And I'm going to take fees. Actually, I'm not going to do that. I'm going to tokenize it. Now I put it into a new co, and then I tokenize the new co. Nobody remembers where Teddy was. Nobody knows that Teddy got it from Chris and Chris got it from Vlad. No one, you know what I mean? Like it just is.
I think, right. When you add tokenization, that's when it gets sketchy. I think up in like third layer SPVs.
It seems legit. It seems so legit. And then it's not. And you're like,
yeah. So, yeah. I was just, I was like the tokenization side totally like adds sketchiness to it. But I was just, some GPs do third layer SPVs on the, like you said, on that side, which you're not worried about. And those can be fine.
This is why the totally decentralized, tokenized, everything is kind of bits and pieces doesn't work right yet. Once everything comes together and there's a dual-sided marketplace, there becomes policing. One of the biggest parts of the policing is what you're about to show, but is the regulatory component of this and being Reg A+ and tracking it And eventually we'll get to a place where it's like, there will always be scammers, just like there's people who sell penny stocks. But in this scenario, we will get to a place where, like, if you're a platform caught selling a third or fourth party SPV, you're going to have to redeem the entirety of it and or probably just shut down. And I think that's where we're going to get. So tokenization is awesome. And I think for the most part, it is secure and it is evolutionary to this business. And eventually in the near future, or not too distant future, we're all going to be on it. I don't have any doubt. But right now we're in that rough water where, like, you're on vacation in Florida and it went from really light blue to really fucking dark. That we're right there. So, like, we got to get a little further out is all I'm saying.
So I wanted to show something, going back to something Teddy said of, like, you know, what does Republic actually own? I don't think most people know this. If you go to SEC Edgar, now Republic has done their note offering. So you can look up, this is all completely public to anyone, Republic Core LLC, which is the entity that they did the Republic note on. They publish their annual reports every year. And you can go into the annual report that was just basically published by Republic on April 30th. Within that, it breaks down their complete holdings for all of their entities. So this is Republic Capital, which is their private Reg D investment arm. You can see all their carried interests amount upon any exits, but you can see companies like, for example, SpaceX and lots of other ones on here, lots of Robinhood, Relativity Space, Plaid. So you can see a lot of these big names are on there. It's one potential way if you want to do a little bit of diligence and say, like, do they actually have, you know, some of these companies? Now, that being said, right, a lot of this is probably committed to LPs who are investing in Republic Capital, but they do own some shares. They have some exposure, right?
Yeah, but what better way to do redemptions to your LPs than to sell mirrors of a bunch of this and then offer back your principal, and now we're all on carry.
100%,
so, like,
right?
This is a brilliant move by Republic, and I mean that in, like, literally the utmost respect. Like, that is a brilliant business move. It is forward thinking. It's all the things. There's, of course, just this, like, linchpin potential, you know, problem. But
the other thing, so all these offerings today haven't been filed with the SEC yet. So these are being done under testing the waters for Reg CF, actually. So if they move forward with this, it would be a $5 million offering under Reg CF, according to how they're testing the waters today. Doesn't mean they couldn't change things with Reg A, but, you know, Reg A has a lot of additional complexities just in terms of getting qualified with the SEC. I believe, you know, when Republic actually did their note offering in the past, they were trying to get it qualified as a Reg A for several years, and then eventually just ended up doing a CF offering. Now, that being said, completely above board, like what they're trying to do, right? They're going through all the right channels, and it's still an investment contract, right? So they're still registering it as a security. This isn't Republic trying to do something necessarily nefarious right now. But yeah, so I just wanted to pull that up in terms of the AR's annual reports are such an underutilized resource. So make sure you can always go to Edgar. You can pull these up for any of the companies that you've invested in. It just happens to be particularly interesting because it's Republic's CAR, where they disclose all of their investment holdings for all the different companies that they've invested in. So,
and just in your quick scroll, the vast majority that are on the list that we just looked at are on this list.
Absolutely.
I didn't go through the entire thing, but it's quite a lot.
So, well, what does all this mean for the industry? You know, obviously Republic here, I don't know if anyone saw this coming. It's not surprising given that they are such into digital assets, but having the tokenization of some of this late stage secondaries, where does this stack up in terms of some of the other names out there? You know, Start Engine has Start Engine Private, which if you look at Start Engine's public disclosures, because they've had their own Reg A raise going on, that's been extremely profitable for them, right?
That's like their whole business now.
It's like tens of millions of dollars, if I recall, or at least $10 million of revenue just from the private offerings. So is this Republic trying to get a little piece of that pie or compete with them? Or where do you think this kind of fits in the lay of the land in terms of all the other investment crowdfunding platforms out there?
Yeah, I think I've been saying this for quite a while. Again, full disclosure, not working for or representing Republic here. I think Republic wants to be the rails to this system, to this world, the OS for this system, this tokenized retail world. I think that the private stuff, which I'm working on something as well that hits private, I think that stays relatively the same, and it will be good business for Start Engine, and they've built a reputation and have an investor list that are interested in it, and they still operate as a platform that is offering up as their primary source of business individual offerings. I think WeFunder is the same, and they have their own, approach. They take more of the we follow the YC funds, and that's kind of our thing. And we're more like tech startup-y. Republic has demonstrated on Kingscrowd in our regular chart of the weeks that they are spending less money, running less campaigns, and doing less general campaign revenue. Not like off the chart gone, but like just a lot less relative to their past. And yet their revenue is probably higher than any of the companies we just talked about, maybe even combine some of them. And it's because they do a lot of business on tokenization and building the rails of look, I'm just going to say, a little birdie maybe said this to me or left it on my mailbox this morning, but I heard that, and not from Republic, by the way, or anyone at Republic, I heard that this new announcement yesterday from Vlad at Robinhood saying that in the EU only, not in America, the first people who sign up for tokenized stocks by July 7th will receive €5 of either SpaceX stock or OpenAI stock. And the birdie squeaked in my ear that was Republican Cedar who's making that possible. So I kind of feel like if I'm Republic, it's like, yeah, we get really unique offerings like Hamilton Lane. We get really unique offerings like the movie stuff that they did with Richard Rodriguez and blanking on the other dude. They raised $5 million each. They get really unique offerings, but that's not their main thing. I think that what they really want to happen is that retail marketplace channel turns into, if you're trying to access retail and you're in the token digital crypto world, you got to come through us. And I will tell you, that's a multi-billion dollar business relative to like, hey, we took in 10 to 12 million this year on, private investments. That's a fund model that happens to be digitized on a platform, which again, no knock. I'm trying to do that. I'm not smart enough to do what Republic's doing, but like, I think that those businesses, so long as the demand, two-sided demand, so long as the demand from the investors that we're talking about at Start Engine for private is not true retail, unaccredited, $500, $100 a pop, as long as that's not their desired outcome, and as long as the companies themselves are not trying to tokenize their assets, or like that everything is tokenized, they're going to do just fine. They're going to keep doing what they're doing. But for anybody else in the world who's chasing or trying to pursue tokenization, I think that Republic is definitely just shot a rocket into the air, is what I think.
Now, from the investor's perspective, Teddy, let's say you have the opportunity to invest in the SpaceX Mirror token on Republic, or say there were secondaries on Start Engine. How would you go about thinking about that today?
Yeah, I mean, so Start Engine Private, a lot of people don't know this. So they advertise Start Engine Private as having no fee, no management fees. They do have carry, but on one of their offerings, I forget the company, might have been Anthropic or something, but I asked them like what the spread was between what they purchased, what their PPS was when they bought it on secondary, and what they're selling at it now. And it was like over 40% markup. They're like, but we don't charge management fees. And I just responded, I was like, but your markup's your management fee. He goes, well, you could look at it that way. So it would just all be about, looking at that spread and like figuring out, like, it should not be, in my opinion, that high.
What about from the risk perspective, right? So there's like getting the absolute lowest cost. Do you look at investing in a secondary, say through Start Engine Private, differently than the Mirror token from a risk perspective at all, or?
I mean, I think the Start Engine, if I was accredited, I mean, obviously like there's a whole framework of like layered SPVs. Like, if you look at it, it's like Anthropic won a series of Start Engine Private. So they just have like a bunch of those all under one GP. And that's a infrastructure that's been used so many times. And that's what all the GPs, syndicate GPs use. So the Mirror token, it's just tokenization. I don't know. I feel like we just have this huge hump to get over of like, anytime someone hears about investing in anything to do with blockchain, especially when it's not regulated at all, it just like comes across as sketchy to me.
Co-sign on that. I'm putting my money in paper until there's a true secondary. Like, right. I lived through OpenSea once. I'm not living through it again. Thanks.
OpenSea. So to answer your question, Brian, I would do Start Engine Private because the word tokenization is not in it. And it's just a very typical kind of, interest in an SPV structure that owns underlying shares. Like, and that's just.
The other side of that, though, is especially if you're a non-accredited investor, but even if you're an accredited investor, there's probably a much higher minimum on most of those private offerings, right? Like we're talking $5,000, $10,000. If you're looking to get $100 little splashy cashy, like $500 exposure, you're probably not going to get that.
Yeah. I mean, but then my thoughts on that are like these late stage opportunities, like these are no longer VC investments. You're going to get like 5X or under on like most of these, unless it's like Figure AI, which like ballooned 15X in 12 months. Like I don't even know if it's really the asset class for like small investors, because the return is just, it's not going to be like that substantial where like.
See, I think that's what it should be though. Like, I think that's what if I'm a small potato investor, if we want to keep playing the gambling game, then we can keep having them invest in incredible long shots, and maybe one day someone will strike it rich. Then go to the casino for that. I would actually rather have you put 1,000 or 2,000 or 500 into something that is like almost certainly not going to go to zero. And like if it stretches 10 years, then you're going to lose to the S&P. If it's 5 years and it's 5X, you're going to beat the S&P. And if it's like somewhere even less or better, then you know it's a great investment for you. The liquidity issue is always the part that gets, dams everyone up here. I actually think that one of the things, you both brought up great points here. One of the things that's going to happen, I think, is going to stretch out the fee structure so that the idea of being able to charge 40%, which is fucking usury, is going to go away. Like I personally, and this isn't because I'm special and I have, access or whatever. I'm not, my only SPV I will invest in is 1 degree of separation. I want to know, like I did this with Tribe for Apollo. I wanted to know that that Arjun had the same relationship with the CEO of Apollo as he did with Kraken, and now he is the CEO of Kraken. Like when I invested in Apollo, that is the furthest extent that I will go from an investment in a private where I'm going to write a real check. It is either to the company direct or 1 degree separation from someone who is a lead or co-lead. And I think any other SPV after that, you're playing. You said you're not playing a venture game. I think you are. I think when you're investing in something that has a 40% knock on it, you're still investing in venture.
Right. It's like clear that hurdle you need. Yeah.
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 So to me, it's like, I think what you're going to see, and hopefully I'm able to, I keep alluding to this, but hopefully I'm able to get into this space soon here with it and share more. But like, there's a lot of work being done. And I kind of mentioned it before, but like the idea of companies and initial investors actually being cognizant of the second future transaction and like the way that they're writing their deals being a little bit more open. We're going to start to see a lot more direct investment, a lot less of this like syndicate that was like triple backed. And then naturally, as a result of that, through tokenization, the clarity. So you're going to know like this is one that's got 2 SPVs. This is jacked up 3 times. Like that stuff's going to actually help us, I think. But right now, I'm with Teddy. I'm investing in paper even at a 40% markup, probably.
I mean, I think the fee thing you mentioned, Scott, is also interesting. I love using just analogies with the public markets, but it's like, old school mutual funds. You had like the front loaded fees, you got fees in the back end, large minimums. Now everything's fractionalized ETFs, like basis point fees. Like the whole market, if you just look at the chart of fees, has gone down over time. And I got to imagine some of this innovation in the private markets is just going to bring some of those cost savings that will end up being better for investors. Now, I could take a really cynical take on this as well, where this type of structure of these forward contracts is kind of the company like shorting that company, right? So in a way, it would be best for Republic if SpaceX actually went down before they IPO'd, because they're pre-selling that. They pocket the difference because they just have to pay you back with shares that are now worth less. So I don't think from like you said, Ken, the whole team at Republic, I think they are trying to do the right thing, but is this going to incentivize people to come and try and essentially sell at the peak of some of these crazy, could be called crazy private market valuations to retail, to unload all that risk, get out at peak valuation, and then put the risk on retail where it has to keep growing till IPO?
I mean, this would not be the first show with you, Brian, where I brought up the fact that I think shorting startups and shorting deals in general is going to become a very common practice. I think futures and shorts and puts on private assets are about to become big fucking business. I believe that.
I mean, Teddy, you've done the analysis in the past. People can look up the charts on Kingscrowd with some of the IPO performance, right? But it doesn't typically end well. And these are not the typical crowdfunded companies either. These are like household names. But still, when you get such a just hysteria around a brand, like,
yeah, it'll just like calibrate valuations more. Like with private market companies. Like some of these valuations are just like have no basis in financial. They have no financial basis, and yeah, if you're able to short it, it'll just like calibrate the market. You know, that's good for everyone.
So to be more true to value potentially.
Of course, these are like the very large late stage companies. Like obviously, like shorting actual like early stage startups, like probably, I mean, 80% of startups fail. But yeah, as soon as you're getting into the growth stage stuff, I think that could be a good thing. Scott, are you working on that?
It's definitely something that I'm thinking about. I'm not smart enough to handle the shorting part of it, but I do think that setting up an opportunity for you to stake your private assets and do different things with it is a very interesting opportunity that I think is overlooked because there's a certain generation of investors that a lot of the rich guys don't deal with, and they don't really understand what they want to do with it. So like they're all trying to learn quickly here from crypto of staking and so forth, and they just look at it like margin trading. It's different, and yeah, a lot of things.
Awesome. Well, we might be on track here for our longest podcast yet, but I think it was a
greatest show
today.
Yet. This was the greatest show we've done yet. This is the shit right here.
You can tell we're all a little bit passionate about just innovation in the finance space and talking about crypto or digital assets or late stage secondaries, anything.
Shit coins, yeah.
But for everyone out there, if you want more great content like this, make sure you subscribe. You'll get updates when we do all our future weekly podcasts. And head over to Kingscrowd, kingscrowd.com. We are the go-to place for retail private market investing and capital raising. If you're a founder, you're looking to raise capital, we've got a lot of great resources, data, and tools to be able to help you succeed. Until next time, we'll see everyone back here on next week's show.